Such great content this week on LFD. So we broke our digest into two parts. In this digest part one, we tackle the question of what happens after the PPP for small business fintech lenders. First, we must understand the state of small business lending in the US, which has been dominated by the SBA's multi-billion-dollar Paycheck Protection Program. Recall that fintechs were effectively blocked from participation in Phase 1, so the heroic efforts and magnificent results of these fintechs were entirely achieved during the second round of the PPP. Lawmakers and regulators take note. Had you continued to refuse fintech participation in the PPP, well over $5 billion in loans to small businesses simply would not have been funded. Leading fintech Kabbage, the fourth largest PPP lender in America, issued a median loan size of $13,500. They are serving the smallest of the small with efficiency that no bank can replicate. The four small business lenders we hosted last week provided funding to nearly 200,000 small businesses through the PPP program in the past 8 weeks. Rob Frowine of Kabbage said recently that this was the most arduous challenge he's tackled in his entire career. Here's his partner, Catherine Petralia, quantifying that challenge.
500,000 customer calls a day during the height of it. So
500,000?
Yeah, it's crazy town. And so needless to say, they were not happy because they weren't able to get to somebody. So there was a lot of frustration, a lot of fear, a lot of anxiety. But what we found, what we were surprised about on the other side of it, is 95% of our PPP borrowers were new to Kabbage.
While there were remarkable similarities between the solutions these companies provided, there were many differences in the way that they approached and attacked the PPP opportunity. Here's Everett Sands from Lendistry describing their customer acquisition strategy.
Yeah, so we try to focus on underserved, which it sounds like all of us did, which is awesome. But we try to focus on minority borrowers specifically, which for us were African American, Hispanic, Latinos, and women. So we try to get really deep into those borrowers. Maybe a little bit different in our outreach effort is we made a conscious decision to go into churches, to go into chambers of commerce and different organizations like that, so we could be somewhat intentional in terms of the borrowers that we hit.
Now, there's more than just lending through the PPP program. So Peter asked Angus Sanders of Funding Circle to comment on the comprehensive loan demand among American businesses.
We're still very much focused on PPP. The demand has actually ticked up a lot in the last couple of weeks. It's, as Jared says, it's not at the peak level of demand, but it's about as high as it's been through the process, apart from that kind of crazy couple of weeks. There are also borrowers for whom PPP is not the right loan. They don't need it. They have fewer employees or it's just not what they want. And so like Jared, we're seeing a lot of people asking about 7A loans and even some core. So yeah, demand is certainly we don't expect demand to be our problem in the next 3 to 6 months.
And what about the online discovery experience that small business owners have gone through? What has that been like? Jared Hecht of Fundera explains.
And they go online with some degree of skepticism as they're introduced to a handful of new lenders or a marketplace like Fundera. And then at the end of the day, it's our job to make them more than pleasantly surprised and happy with the experience. We just had a lot more of that happen over a short period of time with much higher stakes than what we would normally experience in
Right. My business is going under if I don't get this money.
Yeah, exactly.
Absolutely.
So you deal with like this overwhelming range of emotions. And then ultimately, if you can service them and get them approved, that frustration turns to most of the time elation. Now, I think the important thing to recognize here is like, this is step one, right? It's essentially like helping people actually access these PPP funds, where it was frustration, elation, and now you have forgiveness coming up.
And forgiveness will have its own roller coaster moments. Now, there are two somewhat competing narratives today. First, that trust in banks has increased during this crisis. Second, that people have been extremely frustrated about banks' ability to serve us. We asked our panel what their gut told them about the mark this will have on the American business person's psyche. Here's Jared.
It really comes down to who you bank with. And this is what we saw. Like large national banks, more of their customers are likely disappointed in them than they are super stoked about their experience with PPP. Smaller community banks, extraordinary performance. Like what we saw across the board was that specifically with community banks and smaller regional banks, they went to town for their customers. They hopped on the phone with every single one of their customers. They got through every single application that was submitted to them and worked night and day to service all of their depository customers and provided them the customer service that they needed during this trying time.
The heroes of the PPP. In my strong opinion, it's the community bankers and the fintechs that worked 24/7 to help small businesses in America survive this horrendous economic crisis. Jared continues.
National banks just don't have the infrastructure to do that for every customer. They do have the infrastructure, just as Catherine was alluding to before, like segment their customers and hone in on, who are their most profitable customers, who has the most deposits there, and prioritize small businesses accordingly. But I think small business owners had, there's just a dichotomy of experiences depending on who they actually banked with. So I think what we inevitably will see is not a great migration, but some migration of deposits from large banks to smaller banks, whether those are community banks or smaller regional banks, or challenger banks that emerge. So good timing on the good timing on opening up a depository account. Yeah.
Next, we followed that thread and asked, is there a long-term shift in business banking here?
I read there was a survey they did that said that 40% of businesses wanted to change their checking account because they were so frustrated with their banks because of the PPP thing. And anecdotally, that's what our new customers are telling us. It's the same exact thing.
Mm-hmm, mm-hmm. Well,
yeah, similarly, I was going to say I think it's a big jump to say like suddenly everything is totally different to how it was before. But there's an ongoing trend away from the banks towards fintechs. We see all of us are definitely growing faster or have been growing faster than the market historically, and this is probably just a small acceleration on that path.
And as deposits shift to community banks, there will be a new pressure for those banks to find investments to deploy their newfound cash. Here's Everett on that topic.
Side, to Jared's point, when the deposits shift and they swell to those community banks, I mean, for those of us who've been bankers, that's a liability. You got to immediately find a loan product to push that money out to, or those deposits will crush that bank and close it. So, they have to immediately, I think, and especially in this environment, they're going to look for partners right away and say, how do we get this capital out the door immediately? Right. So I think we're on a winning side of both scenarios.
And I might just add that there's a decent chance banks will find their fintech partners through Lendit. So this begs the question, how are these fintechs viewing the opportunities to grow through this experience, particularly in light of how they serve these companies, these new customers with the PPP? We'll start with Everett.
I think as leaders, our job is to make sure that we are constantly improving. But I think that's a risk you take in any business. You want to increase your acquisition, your customer acquisition. You want to decrease the cost of your customer acquisition, and with that comes some risk and some reward that you balance out.
And now, Catherine.
We also have other products that we're launching. So we have checking account that's launching in July, and we have payments that are growing. So we have other sources of revenue that are not necessarily lending. And we're focused on those for now, especially because they're products we can offer to the new folks we've met through PPP.
Catherine ended the discussion with this brilliant comment on the resiliency of the American entrepreneur.
Obviously, people are scared, they're frustrated and confused, but at the end of the day, I think American entrepreneurs are incredibly resilient and are fighters. And you're going to see businesses close down, but you're going to see them start right back up. I bet we'll see more new business starts over the next 12 months than we've seen since the Great Depression, because that's just what we do. That's just how we operate. We keep on rowing. And I think that's exactly what business owners are going to do. And all of us here on this panel will be there to help them.
Yep. We have it. There's a new donut place in Denver called Pandemic Donuts.
Really?
We'll let Peter have the last word here as he tips his hat to all those who are working so hard to keep the money flowing in our shackled economy.
I'd like to applaud all four of you, and I think the whole industry has really done a great job. The small business lending, I think, from a fintech perspective, has really risen to the occasion, and I appreciate all the hard work that all of you guys have done.
To quote Everett Sands of Lendistry, I think fintechs are on the winning side of this one. Until next time, keep up the hard work and take care.